Welcome to our podcast series, Talking with Traders, hosted by expert trader Garth McKenzie in London, from where he's interviewing various guests on the topic of trading.
Welcome back to another season of Talking with Traders with me, Garth McKenzie. This is the 6th season of the podcast, and we're into our 3rd year since the podcast began in 2020. Once again, IG have come on board as sponsor and agreed to fund this podcast for another season. We really are privileged to have such a global leader in CFDs trading as our podcast sponsor. Over the coming weeks, I'll be interviewing various guests from around the globe to bring you their market insights. I'll be digging in to find out what makes them tick, how they see the markets in the year ahead, and what techniques they will use to succeed in the markets. Some of the guests will be returning guests from previous seasons, and some will be new guests that I've managed to convince to join me to give up their time and share their insights. As we enter 2023, there's as much uncertainty as ever around where the markets may be headed in the next 12 months. We've just come off a horrid year for investors in 2022, where a typical 60-40 portfolio delivered its worst annual return in several decades. But what of 2023? Will the US lead the world into a global recession, or will the central banks manage to achieve a soft landing for the global economy? Will inflation come under control as base effects kick in and supply bottlenecks open up? Will US earnings hold up in the face of a weak economy, or will they disappoint? Will we see continued weakness in the US dollar? I'll be asking these and many other questions to my guests in the coming weeks. The idea behind these podcasts is for you to get a variety of views from a broad spectrum of market professionals. None of this is intended to be seen as financial advice, but it is intended to get you thinking and to weigh up what possible paths the market may follow in the year ahead. Please remember to subscribe to this podcast in your favorite podcast app. That way you'll be notified of upcoming episodes as they get released. Once again, thanks to IG for sponsoring this podcast for a 3rd consecutive year. Thanks for joining me, and please enjoy Season 6 of Talking with Traders. Welcome back to another episode of Talking with Traders, and this time I'm delighted to welcome to the podcast a new guest. His name is Rajan Dhall. He is a friend of mine from here in the UK. We occasionally see each other at the cricket club where our kids play cricket, and we have had the odd pint together with a few mutual friends down in Surrey. Raj, welcome to the podcast. It's very good to finally get you onto the podcast and to have a chat to you today.
No, thanks for having me, but Garth, it's great to have another chat with you again.
Yeah, thank you, man. Thanks very much. Raj, just give us a little bit of background into yourself. Obviously, you're a new guest onto this podcast, and with a lot of the audience of this podcast being based in South Africa, but also globally, it's a new face. So just give us a little bit of background into yourself, how you got involved in the markets, and sort of in 2 minutes, the progression that your career has followed to get to this point.
Yeah, no worries. So I've now been in the markets trading actively for about 13 years. So it's been quite a journey actually. I came into this industry in a very unconventional way. So I did my degree in sport and exercise sciences, and I got a job in a gym that was in the JP Morgan building in the city.
Okay.
So I used to do a lot of fitness programs and I was a personal trainer and a fitness coach for a lot of the people that worked at JP Morgan, and looking after investment managers, traders, and stuff like that. And when I started to make a decent bit of money, I used to ask them, well, what should I do now with my money? Like, where should I invest? What shares should I buy? And things like this. And then, they used to just give me little tidbits here and there. But then I just, like, one time or another, there were a few companies that I invested in that made me more money than my job. So then
Wow.
I actually just slowly started to transition and shift over into trading more. And then I because I was still young then, I went right the way through the investment industry as well. So, I worked on a trading floor, I worked in a news and analysis department. I've worked at education companies. I've worked like right the way through the industry, to be honest, in that 13 years.
Wow. Okay. That's interesting. Such an interesting background. And I've often wondered about those kind of people who, are perhaps in the stockbroking community, but doing the odd jobs. You always think of the shoe shine guy, the shoe shine boy, the famous thing in the olden days, and they always used to say, well, when the shoe shine guy is telling you what stocks to buy, that's time to get out. But you also wonder, there's probably a couple of those kind of stories where those guys got the odd tips from stockbrokers and people in the know, and actually might have done phenomenally well out of it without actually being in the limelight. So interesting to hear your background. But now you trade for a living, right?
Yeah.
And you also run the trading college in the UK.
Correct. Yeah. So Lee Sanford, he's the owner and managing director of Trading College. I joined Trading College just a little bit before the pandemic. Okay. So I only actually started at Trading College working 2 days a week, and at the beginning, just purely doing running live trading sessions, just giving my view on the market. That was literally how that started. So there was no plan to kind of that to go all encompassing or whatever. But when the pandemic hit, Trading College just got absolutely manic. A lot of people didn't think they were going to keep their jobs. Panic was in the air, and everybody was scrambling to learn how to make another living. So they were selling lots of courses and things like that, and the community was getting bigger. And then that kind of meant that I had to do the job that I was doing 2 days a week, but just kind of expand it. But then what we realized is that it was kind of the community needed kind of more servicing, and we kind of brought a couple more products on board. Kind of basically made the resource a bit more well-rounded for the community. It made it really more community orientated, and it basically just got really big and really solid. And now I'm the head of trading there, and it's just really fun. It's just a really nice thing to do, really.
Yeah. Okay. Very, very interesting. And that's a story that we saw right across the industry. I mean, I know in my subscription business also boomed during the COVID period, because suddenly everybody was at home. Some people lost their jobs. Some people did want to start trading for a living, which at the time I thought was quite a scary prospect for a lot of people who had no experience of trading. Although, having said that, I mean, that market rallied like crazy after COVID. So I think a lot of those people who got into the market at that stage actually did do quite well. Yep. Whether or not they've got the skills to keep it up, and whether they've managed to hold on to much of that money through the bear market of the last year or not, I somewhat doubt. But I guess the kind of people that are coming to Trading College are, I guess, coming with a somewhat more realistic aspirations in terms of what it might take and the learnings that are involved to be successful as a trader. Am I right?
You are 100% right. So we've got about 6 or 7 strategies that we kind of teach everyone. Some of them are trend following strategies. Some of them are reversal based strategies. They kind of can mix and match depending on what market condition you're in. So the strategies work. They're proven. They've been going for a very long time. Really, what my job is, and 90% of my job is kind of coaching people about the mindset of what you were just talking about. Really, is the mindset of really how can you handle yourself in this market. This is a market full of uncertainty and chaos. I kind of liken it to the purge. You've kind of given yourself some rules. Yeah. Can you stick to those rules? You're the only person that can manage those rules and manage yourself. Yeah. Somebody's going to find one way to do something or another way to do something or whatever that's going on in the background. So the other thing that's complex about this is that every individual is different. So, all of those different cogs and different bits and pieces we have is finding the right ones for the right person, and the right lifestyle, and then the right pace, and then the right, aptitude and the right personality profile. That's kind of what the coaching is that we try and manage. The strategies are the strategies. They work. It's can the right person choose the right thing that's right for them and manage themselves while they're doing it. That's the hard part.
Yeah. Fantastic. I mean, that's similar to the way the approach that I look at with trading. I guess I've got a list of strategies, a list of setups, I call it, in a playbook, which your friend and colleague, I know, Stephen Goldstein, who's been on this podcast, he's big on that, on the concept of having a playbook. So yeah, I mean, I guess you've got 6 or 7 strategies in the playbook that you refer to, but then again, it's not just about the strategy; it's about how you manage yourself. So to that extent, I mean, what differentiates those traders who are successful following your 6 or 7 strategies versus those who are not?
I really, I actually did a seminar about this. It was kind of like the top 10 things or something like that, or the top 5 things that I see in common from successful traders that I've coached over the last 2, 3 years, right? Now, my coaching has changed over the last 2, 3 years as well because I go through more psychological development all of the time.
Yeah,
So, we're always on a journey, aren't we? Like we always change and twist and turn.
sure.
But I think one of the biggest things is that the people that can kind of have a lot of self-acceptance, so they understand themselves, their
Mm,
strengths and weaknesses, and then when it comes to their trading plan, they develop processes around those strengths and weaknesses, but they're just honest with themselves about it. Like some people who are too aggressive or too impulsive, if they know that about themselves and then they control their risk management very well, that's going to serve them very well. But somebody that finds it really hard to pull the trigger, for example,
mm,
a very detail orientated person, a perfectionist,
mm.
they might just need a checklist to pull the trigger, and as soon as that
Yeah.
checklist is done, just go and do it. So like if that it, I think that self-awareness and that self-acceptance, that's the most important skill for me.
Yeah, yeah, that's right. And just quickly, I mean, in terms of the style of trading that you mainly approach
Yeah.
these 6 or 7 strategies, I mean, is it day trading? Is it swing trading? Is it position trading? Or what does it look like in basic terms?
Okay, so within the community it's both, but me myself personally it's swing trading. So like I like to hold positions that are doing well for as long as possible.
Right.
So for example, some of the positions that I'm holding now, I've got an index position, like a long index position in some in a couple of indices actually, but like I will try and run them for as long as humanly possible. So
Right.
my average winning trade would length, I'd probably say maybe about 3 months
Yeah.
sometimes.
Okay. Wow. Okay.
And I'm trying to compound within those positions as well. So it's not just one trade. So that so I want to really try and maximize my winners. It reduces my win percentage, that
Sure.
happening, but it
Sure.
just gives me a good risk to reward. And I'm a bit of a Zen character, so I can go to sleep having positions on. It doesn't bother me. I really don't care. But what I can't do is day trade. I'm not a good day trader.
Mm,
I can't just watch the market move up and down all the time and make decisions really, really quickly and think that I can make the right decisions on a 5 minute chart in the same way that I can on a daily or a monthly chart. I'm not that guy. So I
yeah.
have to be honest with myself. I'd love to be a bloody day trader, but I can't be one. So
Yeah.
so I just prefer to swing trade. It's better for my lifestyle, it's better for my stress levels.
Yeah, yeah. Look, I can relate to that entirely because I mean it's very similar style that I also follow.
Oh, cool.
Swing trading. Like you, I'm not a day trader.
Yeah,
I'm just not cut out for it. And I guess, like you said, it's about knowing yourself and it's accepting the type of personality that you are, and fitting your trading approach to your personality type. So,
exactly.
I mean, I do know of some guys who are very successful day traders and
Yeah,
they're incredibly quick with the buttons to push the buy and sell button and get in and out at the right time and make money out of that. It's very, very all consuming.
it is.
And also the kind of guys that I know who are doing that, that's kind of their personality. They quite like it fast in all aspects of
Yeah,
life.
yeah,
Um,
true.
whereas, like I guess for yourself and for me as well, it's just not like that. Perhaps our personalities are similar in that sense that we just don't like it quite as fast
I
and
think so,
furious.
yeah. And then on the coaching side, like my most successful student has been a day trader.
Mm,
So like we bounced off each other in terms of our contrast, like very well. Like whereas he was, just too aggressive, and then like but not successful. But then like when we quietened it down and introduced some rules, and he was able to stick to those rules blindly. that was when he started to improve, because he had everything he needed to be a good day trader already, but he couldn't control the chaos. So then, like, adding the risk management and the psychological management techniques in there helped him manage that chaos. And he's done phenomenally well.
Well,
So
that's good. That's great to hear. In terms of risk, what do you notice that your best or your most successful traders are typically risking per trade? I mean, the old rule of 2% of capital, I mean, in my opinion, that's often too high. What do you
yeah,
see that as? What is, yeah,
I would agree with you. So normally, on a first trade, like, if we talk about me personally, on a first trade where, like, I really don't care if I'm going to win or lose it, because it's the initial trade for me that lets me know whether I'm going to be able to compound or keep positioning into a trade over a certain period of time. So on a first trade where I'm really, like, I could be honestly 50-50 on a first trade, if I'm
yeah,
honest with you.
yes,
I'll be maybe like 0.5% risk on that first trade.
right, yeah,
But if it gets to like a 3-to-1 position and I want to add to it, that's when I can start scaling in. But the good thing about scaling in at that stage is you can use the profit, or like you've got a bit of a cushion from the first trade.
yeah.
So, like, my overall win percentage of my trades is not very high. It's probably about 47% or something like
Okay,
that.
yeah.
But when I do win a good trade, like, I'll get 9-to-1 out of it, or
Mm.
10-to-1 out of it. So that's what I'm trying to aim for. So yeah, 0.5% is the first trade that I'll try and get in.
Okay, all right. It's interesting what you said there about your winning percentage, and I find a lot of the traders I speak to, it's kind of similar. And I know when I researched my own records of the last year, my number was very similar. It was 46% winners and 54% losers. But the winners were on average were 3 times bigger than the losers on average,
Yeah.
which obviously means that you've got a positive P&L curve.
Yeah, of course.
And I guess that's it, right? It's about keeping the losses small. I mean, I don't know if you ever have thought about, is there a holy grail in trading? I don't think there is, but the one thing I will say, if there is, it is that you've got to keep the losses small.
Yeah, I think this was the problem during my time of working through the industry. So when I went from, like, technical analysis, first of all, because I studied with the STA, and I went quite deep within the Society of Technical Analysis.
Yeah.
I also then worked at a analytics company. Then I also worked at a news company, like a fundamentals, like a proper real-time breaking news company.
Yeah.
And that, to be honest, was me trying to get experience from every part of the corner of the industry to see if somebody knew something that I didn't, to be
Mm,
honest.
mm, mm.
And really, I'm going to try and put this in the best words possible. But when I used to receive research reports from, like, some of the best organizations in the world, I used to realize then, after maybe looking at them and studying them for about a year, they were no better or worse than what I was doing myself.
Yeah.
And I realized that some of my mates were in the city getting paid like 250 grand a year, getting bonuses on their research reports, and their kind of performance level of their analysis. And I was thinking, well, like, then we're looking at 50% win rates here. You know what I
Yeah.
mean?
Yeah.
And that's why I truly believe there is no holy grail. The holy grail's in here,
Yeah.
me. So
Totally. Totally. You mentioned the STA. That's the Society of Technical Analysts. It's a body that's here in the UK. Just tell us a little bit more about that, would you, Raj?
yeah, so when I first started trading, I did something quite amazing that I didn't know was amazing. So it's not a lot of money, by the way. I didn't know what I was doing. I put $200 into an account, and I turned that $200 into $4,000.
Wow.
Yeah, and I didn't know what I was doing. I was just taking I was taking maybe 2 trades on currency pairs every morning, going to work, coming back and seeing what had happened. And
Mm.
this was over the course of like 3 months. And I thought, oh, I'm about to crack this. I'm going to be like a millionaire or whatever. So then I took 2 weeks off work, Thought I could employ the same process on a lower time frame, lost half the money, so I went down to £2,000,
Mm.
$2,000 rather, and I thought, oh crap, like this isn't as easy as I first thought. So
Yeah.
I spent that $2,000 on the STA's course.
Right.
So that's how I might in with the Society of Technical Analysis. I thought, well, I need to pay for some education now because it's not as easy as I thought it was.
Yeah.
And it was just really good networking because the people who I went on the course with, there were some retail traders, some professional traders in banks, like people from all over the place really. And I got to make some good friends and stuff like that in an industry that I wasn't familiar with.
Right.
And and that's how it got going. But as time got on and started working in the city, I then learned a lot more about technical analysis, and I met some much better technical analysts than me, and I started to just be able to converse with them and kind of get in those circles. And just slowly over time, I was asked to teach on the course at the London School of Economics. So I'm a bit of a generalist. So I used to use a bit of Elliott Wave. I used to know a lot about the indicators. I'm that person. Whereas if I went to go and learn something like about an RSI or a MACD, I would go and test it 100 times on 4 different time frames.
Okay.
I'm a statistical human being, so that's what I did. And I then just basically, when I was teaching for the Society of Technical Analysis, I taught a little bit of GAN theory. I
Right.
taught a bit of Elliott Wave theory. I taught a little bit about different chart types, like Renko, Kagi, candles, just little things like that. I taught a little bit about market profile and auction theory. But really, from my point of view, like price is price.
Yeah. Yeah.
Everything else is a derivative of price.
Yes.
You know.
That's it. Price is king, and
Correct.
all of those other things you're right, stochastics and RSIs and MACDs and everything else. It's all secondary. Price is the main thing that you watch, and I guess that's what the path we all go through, right? As you go through, you think that more indicators are going to help you, and the more you can learn, the better, et cetera, et cetera. And then you come back to the point where you sort of say, yeah, well, all of that's good to know, but actually, the mental game of trading is really where it's at. And that's what you should really focus on more than anything, because all of those indicators, they only get you so far, but it's your mental game that's really going to help you or not help you.
Yeah, correct. I think for me, the indicators only really started to help when you start to systemize or automate the process.
Mm.
That's when they'll really start to help. Like the stuff that Lee's done at Trading College. Is he knows that some of this ATR based systems and like that he knows it works.
Yeah.
So to simplify it for somebody who's new, that's why he's developed the systems,
Yeah.
and they're easy to follow, and you know what I mean. If you follow them and you can control yourself and have discipline, you'll be fine.
Yes.
That's why he's developed them, and it's proven to work. So, but yeah, like you said, it is once you get that side down, I think of trading like to have kind of 3 really strong pillars. So you need to have your money management down, like really. If you don't have capital, or you lose your capital, or you're a gambler, or whatever it is, you're not going to last long in this game.
Sure.
Then the second thing I think is your trading system is how you manage your trading systems, and then the last one is the psychology. I think the mix of those 3, it changes like kind of all of the time depending on where you are. But they're the 3 most important things for me.
Yeah, and that's just like 3 legs of a table, isn't it? You have to have all 3 of them standing up sturdy, else it falls over. What about a daily routine, Raj? I'm quite big on this, but I want to get it from you. Do you have a specific daily routine that you follow when you're doing your analysis before the market opens, and then during the day, and then after the trading session's finished?
Yeah, so I'm a big like end of day man. So like basically the close of a session, like depending what equities I'm looking at, is very, very important. So because I swing trade, when the kind of the candlesticks close, so to speak, that's the most time where I'm getting a lot of most of my information for the following days and whatever. So because I'm in trades for, like I said, 3 months or so, the execution time is not the most important thing in the world for me.
Yeah.
So like every evening at about 8 or 9 o'clock, I'll come to the charts and see how the US session is going to close, and kind of, I might do the same thing if I've got time at 4:30 p.m. when it's the UK session close as well. But that's kind of what's planning for me. I'll already know, because of my scanners and stuff, what sectors or what stocks that I'm looking at, that are going to break out next. I'll already know that, so I'll go through my list and see which ones have actually done it at the end of those sessions.
Yeah. Okay. And journaling, is that something that you do?
Absolutely, yeah. I'm massive on journaling, yeah. So the biggest thing that changed my trading, my personal trading actually, was my journaling, because and it was one specific thing. So what I did was I started to write the confidence level of the trade. And I used to think, well, if I was really confident about a trade, maybe I should back it more or whatever. No, like if I followed the system and my confidence was like, really low, they would still win. And the ones that I was really confident about, like above 75%, that I followed my system with, most of the time they weren't winning.
Right.
So it was literally just don't listen to what's going on in your mind, follow the system, and the numbers will average themselves out over a long period of time.
Right.
So it's never about any one trade. It's about like your next 100.
Yes.
How are they going to go? And it was the journaling that showed me that, because the ones I was really confident about weren't winning.
Yeah. It's fascinating you say that, because I've often found that as well. You can get a setup and you think, well, this looks like an A+ setup. This one's going to really work. And sometimes those ones that they're almost too obvious, they don't work. And the less obvious trade setups sometimes do work better. Like you say, I guess you've got to just take every trade. If it applies to the system, take every trade, manage the risk, and the winners should take care of themselves. And you've got to make sure the losers are kept small.
Yeah, correct. And I think, like, also when we had this this downturn in the equities markets recently, I still had some good stocks. Like, I was in some energy stocks, I was in Glencore, a couple of good miners and things like that. But it was that confidence thing that taught me that, like, because I was looking at those stocks thinking, like, my system was telling me to trade them, and I was looking at them thinking, yeah, but should I really be buying stocks now? Like, look at what's going on in the indices, look at the general investment sentiment, and if I didn't buy them, I would have been screwed. My performance would have been a lot worse.
Yeah.
And I bought them with really low confidence, but they actually saved my portfolio.
Right.
So, like, if I hadn't done the journaling work beforehand to learn not to listen to my stupid brain sometimes, I wouldn't have been able to buy like BP and Glencore.
Right.
I mean, I lost some trades along the way, but those two really helped me.
Yeah. Oh, look, like you said, with the win rate of 46%, you're going to have some losers. We know that going into every trade, that one of the possible outcomes is that it might be a loss. On that, trading can be quite an emotional roller coaster, ups and downs. I suppose when you're experienced like your level now, maybe you get on top of the emotions better. But I know from watching younger traders, more inexperienced traders, they experience exuberance when things go really well, and they can get overconfident. And then on the other hand, when things go bad, they can go really bad, and they can get really down in the dumps and depressed. How do you manage the ups and downs in trading? Let's just say, for example, when you go through both. Let's say you go through a nice winning patch and you're feeling like the king of the world. What do you do to level yourself at that stage? And vice versa, when you've had a tough time, you've strung a couple of losing trades together, what do you do then to lift yourself up?
Yeah, so I always only evaluate my book every 20 trades.
Okay.
So that's the first thing I do. I'll never be overly confident or like really beat myself up unless I've got the results from my last 20 trades. Yeah.
Right.
So I always do 20 trade blocks. The other thing is that from my trading, I actually only pay myself every 3 months.
Okay.
So and I also try and live 6 months forward, kind of thing.
Yes. Okay.
So if anything does go wrong, I've got a bit of a buffer,
Yes.
in life. So coupling those two together, that automatically keeps you grounded, I think.
Yes.
Because you're sitting there thinking, well, you're trading now for 6 months time. So
Yeah.
that's the first thing.
Mm.
Then you're sitting there thinking, well, 20 trades worth of data is going to tell you, especially in stocks, it's going to tell you whether you're performing good or bad.
Yeah.
And like the bad thing about about trading the way that we trade is that, like when trends end, there's a big lagging effect, isn't there, of how long you're still trying to get long in some
Yes.
positions.
Yes.
And like what I have to do is I have to accept that I'm only going to catch like 60-70% of that money in that trend, like,
Right.
because I'm always leaving something on the table because
Yeah.
I don't know whether that trend's finished or not at the end.
Yeah.
That's the hard part for me. That
Yeah.
for me is a killer. But I think that's just part and parcel of the way that I trade. I don't think there's
Yeah.
anything, any other process that I can make for that.
I know, correct. I mean, I think all of us know, certainly I speak from experience and I say that knowing when to sell is the hardest part of trading. Yeah.
Correct.
Getting a good entry can do that. Execute a stop loss, easy. Knowing the right time to sell so that you're not leaving too much on the table, or that you're not going to give, not having given back too much of the profit that you'd made. That's the hard part. It's
Yeah,
one
so
of the hardest things.
Annie Duke is the best for this because she said that, when she went in to see hedge funds and do analysis with them, that they found out that they were losing more money taking profit than they were in their losing positions because they would take profit early, right? So,
Yeah. Yeah.
and that was the case with me as well. I think the thing is, as a retail trader as well, is at some stage or another, like you need to bloody pay yourself.
Yes.
We're not like infinite hedge funds or investment managers or whatever. Like, so we
Yeah.
can't just leave these positions for like years and years and years and not actually take any profit from them. There's no point
Yeah.
doing this job otherwise.
Yeah.
So,
Yeah. That's it. Yeah.
yeah, so like even with margin requirements and stuff. So like what I started to do was like because I told you I pay myself every 3 months. I'd like kind of collapse everything, and then whenever I there were positions that I still believed in or whatever, I would just like reopen them again.
Okay.
And I know it's a bit stupid because you pay costs to do this, but I actually, like, for my brain and my soul, it was worth it. There was
Yeah.
a benefit to it rather than just infinitely leaving a position on for that long. So
Yeah. Okay. So interesting. You've kind of answered the question, but I'm going to ask it anyway because I get asked this question a lot. People come to me and say, "Can you actually make money? Can you trade for a living?"
yeah,
Right.
yeah.
And I'd like to ask you that question and hear what your answer is.
Yeah, definitely. I think the issue that a lot of people have with this is that it's not what they're expecting and not what the world has taught them that it's going to be. And it's not like the glitz and glamour of what the Wolf of Wall Street and all this kind of stuff. It's really just not like that.
Yeah.
So like my trading is purely based on probability all of the time, and it's so slow, it's so boring, and like that's the reason why I'm in the trading college community, because I've gone full time to trade on my own by myself in my house twice in my life,
Yeah.
and I hated every minute of it. Like I
Right.
I would keep positions on that would stay on for 2 or 3 weeks, and I'd be like listening to a podcast, reading a book, going to the gym. Like it was boring as hell. Like, and that
Yeah.
sounds like heaven to some people, and it might be for like a month, but it's actually not. You know? It really isn't. So,
Yeah.
so yeah, you definitely can do it. But I would basically think of like how your lifestyle is going to fit in with this before you go ahead and work that out.
Yeah.
The other thing is that realistic expectations. Like
Yes.
if you're in this to kind of like be a millionaire, think of the risk that takes,
Yeah.
and then also the time that it's going to take to learn to do that. Like, anybody can get lucky, like a child can come on the screen and click the buy button and the stock could go good. You know what I mean?
Mm.
A monkey could do it,
Yeah.
like done
Yeah.
studies on that,
Yeah.
random Wall Street, haven't they?
Yes.
But the thing is that to keep repeating that process with good sound money management, that's what a monkey can't do.
Yes.
You know what I mean? So
Yeah.
like, we got to find that balance of not over leveraging yourself, making this fit your lifestyle, and then also being very realistic. Like, I think those things are fine, but within our our trading college community, you know, I at least, I've trained hundreds now, coached hundreds of people, and like I've got like at least 13, 14 people that have left their jobs to go full time.
Really? Okay, that's very, very encouraging to hear.
Oh yeah,
It
yeah.
really
There's
is.
loads. Yeah, there's people that are actually currently doing that now. With us now. So, and there is just so many great programs. To do this on, and you know,
Yeah.
it's just it's do your due diligence. It's hard. It's hard out there, isn't it?
Oh yeah. Oh yes. No, it is. Look, they say it's a hard way to make an easy living. So,
Yeah, yeah,
um, I want to find out a little bit more about trading college as we get towards the end of the podcast, because you've given us some insight into it. But I mean, give yourself a plug, give trading college a bit of a plug, because there are a lot of people out there wanting assistance, wanting education, wanting mentorship, who will be listening to this podcast. Tell us about what you do and how the listeners can get in touch.
yeah. So there's two kind of main programs. So there's one which is called the PTC. So that's kind of like the Pro Trader course. So that's a 12-month program where people just come in, they get like all the videos and all of the strategies, and they've got access to the community, but they have to kind of, twist and turn and work out what's going to work for them on their own. Yeah.
Yes.
It's linear, the courses, so you're going to go through it and then obviously decide. So it's definitely very, very comprehensive. But
Is it
then
hands-on, that while you're learning, you're trading as well? Live?
yes,
Right.
yeah,
Okay.
correct, yeah, because in the live trading room sessions, they do like we do a live European Open every single morning.
Right.
So apart from Fridays, so there's basically you're going to learn from the coaches or the people that are trading professionally, like how they are looking at the markets every single day. Uh,
Right.
and I look after those coaches, so it's a lot of pressure on them actually. But
Yeah. Yeah.
they they do a good job, and it's been going very well for a long time. And then the mentorship is a little bit different because this is where it gets really personalized. So in the mentorship, we do like a personality profile.
Right.
So we work out, the person's, like a disc profile. So whether they're analytic,
Yes.
active or, stable or outgoing, we work
Yeah.
that out. And then
Yeah.
we tailor the kind of trading around that. And then basically based on their life and their commitments as well.
Yes.
Throughout that whole time, the coach is then kind of like watching over them to basically see, how their psychology is performing versus what their goals are,
Yeah.
and then they're trying to mix and match with that to get that done. Now obviously the success rate is very high on that,
Mm.
but there's obviously cost. It's more expensive, right?
Sure. Yes.
So what I try and say to people who are on the PTC program is that when you come to the live trading room, ask all of the questions you possibly can. When you are in the chat room, when
Yeah.
we're there talking, just utilize that space as much as humanly possible. But, with the mentorship, you get, two sessions with a coach every month. We also do a once a month live like day in London or in Twickenham.
Yeah.
So we see the people who are on mentorship every single month as well in person.
Right.
So it's very comprehensive, that one is, right?
Yeah. Yeah.
Uh,
Yeah.
but yeah, it's just it's a really strong program. When I left the city, there was only two companies or three companies in the whole of the retail space that I was ever going to work for.
Yes.
But I just, a lot of these training companies, I'm not going to mention any names, but, they have such bad reputations. And I've heard people who have tried them and, not work for them. And
Yeah.
then also at Trading College, we have people that come to us from many other training organizations where they failed as well. So I know what it's like out there. But it's just nice to land somewhere where you have a good ethos, and
Mm.
we're just honest with people. We say to people, look, these are the win rates. If you got a 50% win rate at a 2-to-1 risk to reward, what's wrong with that?
Yeah. Yeah.
There's nothing wrong with that. You're losing 50% of your trades, but you're making more money when you win. Like, be
Yeah.
happy.
Yeah. You're doing
Whereas,
well. Yeah.
whereas
Yeah.
there's other places they say, no, we win 90% of our trades. We we do this. I'm like, no, it's not
Yeah.
realistic.
No. And if it sounds too good to be true, it usually is.
exactly. And we're not
Yeah.
like that. Like we try to be as open and honest with everyone.
Yeah.
Yeah. Every Sunday night, it's a stock scan club. Yeah.
Right. Yeah.
And like I'll post maybe like 5 positions, that I'm in, but also like a list of like 20 stocks that have come up on my radar.
Right.
So there's one guy who's he's been with us for a really long time. He's got a demo account,
Right.
and he takes every trade just
Okay.
to see how they all go.
Yes.
So he started this demo account with $10,000,
Yeah.
and I think at the moment it's up at $780,000. Like, but obviously nobody's going to be able to afford that margin to hold every single one
Yes.
of those stocks.
Yeah.
But like that, we do funny things like that in the communities, like because I say to them, it's like I don't know what's going to happen next. This stock has just come up on my radar. It's my scanner's picked it up. I like the look of the chart. This is what's going on with it. Let's see if it's going to work.
Yeah.
The CEO could come out tomorrow and tell everyone he's committed fraud. Like we don't know.
Yeah. Yeah.
Like that's out of our control. But what we are going to do is over a certain period of time, over the last 200-300 stocks, we can measure what the performance is like. You know what I mean?
Yes. Yes. Yes.
And we all know that. We're very honest with each other about that. So
Yeah. Yeah. Sounds like a wonderful community.
yeah, it's good.
So how can listeners get in contact, or where can they find out more information?
Yeah, so just a website is tradingcollege.co.uk.
Okay.
I'm on LinkedIn, and things like that. So, that's just generally the easiest way. I should be really more active on social media, but to be honest, I find it quite hard, like, because, I just can't be dealing with it. If
Yeah.
I'm honest, it's just,
Yeah, it can become quite all-consuming. I know. I mean, same boat. I should also be more active on social media than what I am, and
yeah,
I always kind of think, yeah, I'm going to get on it, but you get busy, and I suppose if your passion is trading and looking at the markets, that's your passion, and if your passion is not sending out tweets or Facebook posts, it's hard
that's
to
the
do
thing.
something if you're not that passionate about it.
And like I get like a lot of people, like when I was in my younger days and I was like very deep into technical analysis, and like a lot of people would question it. I would like get quite defensive about it, but now I just don't care,
Yeah.
like because to be honest, if it doesn't work for you and that's what your opinion is, it's fine. You know what I mean? Like just go on with your life. I'll go on with mine.
Yes.
This is working for me. Like it's fine. I don't have to argue with you.
Yeah. Yeah.
That's kind of, I don't know. It's just maybe I've just given up on being bothered with people like that. But I
I
think
think
that's
it's
what ended up
it's
happening.
called maturity. I think as we get older, we just realize, you don't have time for some nonsense.
Yeah, definitely. And also, I know some great fundamental analysts. I know some great economists. I know some great technical analysts. Like, I like the variety. I
Yes.
really, really do. Like, I
Yeah.
still have a view, a fundamental view on like what's going on with the inflation or what's going on with the world. Like, you know what I mean? It
Yes.
doesn't affect my trading
Yeah.
decisions, but I still like to think about it.
Yeah. What's it? Strong opinions loosely held.
Correct.
I can't remember who said it, but I like that saying.
Yeah, because you have to be open-minded.
Yeah. Yeah, you do. You do. And
Uh,
absolutely anything can happen in this game. You never know what the next move's exactly going to be. So yeah.
Yeah,
If we did,
definitely.
we wouldn't need risk management and stop losses and all that, would we? So
100%, 100%. Like I remember, like a few before, Putin went mental and went invaded Ukraine. Like my friends were writing their research reports in investment banks about their yearly view,
yeah.
and then literally that happened like a month or 2 months later, right?
Yes.
They
Yes.
all had to rip them up and start again.
Yeah.
And that's the unpredictability, isn't it? They're
Yeah.
the variables that we're trading against.
Well, that's it. I mean, I sometimes feel for those analysts that have to make a forecast for the end of the year. We've just seen it now at the start of 2023, and you get all the big organizations putting out their year-end target for the S&P 500.
Yeah.
I mean, the targets are so far apart. You know, you could fly three Airbus A380s through the spread, and you kind of think it's a bit pointless, really.
Yes.
Because you can't tell a year ahead what's going to happen. You just have no idea. But you can, as a trader, look at the price action now, see what the market's doing now, and adapt your behavior according to what the market feedback is now. And I think that's what matters as a trader. Trying to make a forecast a year out was a bit pointless, actually.
Correct, because it wouldn't surprise me at all if by the end of the year they kind of cut rates again and kickstarted QE. That would, it's not on the cards. Nobody's talking about it, but it wouldn't surprise me because something could happen where they could be backed into that corner to make that happen again. That's just a variable.
Sure. Yeah.
Anyway, we're just going to roll with the punches. Yeah,
totally. All right, Raj. Well, we've come up to the end of our time. So it's been awesome speaking to you. I've really enjoyed this. Thank you very much. And listeners, if you're interested in Trading College and what Raj does there, you mentioned the website to tradingcollege.co.uk.
Yep.
That's where you can get hold of Raj and the team. And that's it. That's the end of this podcast, Raj. Thank you very much. It's been super.
Thanks for having me.
Thanks for coming. And I look forward to catching up with you again soon.
Brilliant. Thank you. Cheers.
Cheers. Thanks for joining us for today's episode of Talking with Traders, brought to you by IG, a world-leading CFD provider. We really are privileged to have such a leader in the field of online trading involved in this series. Please follow us on Facebook and engage with us there. And a reminder to make sure you subscribe to this series by clicking on the subscribe button on your favorite podcast app. If you've enjoyed this podcast, we'd also appreciate if you'd leave a review on the app too. Till next time.